Watch out for capitalized leases when buying a business. So working on a deal the other day that looked like a great valuation, but this business has certain pieces of equipment that it buys every 2 to 3 years, and they essentially become obsolete. So after 2 to 3 years, essentially the equipment's worthless. It has no residual value. And the manufacturer offers leases on this equipment at attractive terms. So this particular operator was leasing this equipment on 2 to 3 year leases. But because the residual value of the lease is less than 10% of the purchase price, that means the lease payments for accounting purposes are capitalized. It means it shows up on the balance sheet, and it means the assets are depreciated. So rather than seeing a line item for lease payments and it going through the income statement and affecting earnings, it all shows as depreciation. And now this has a big impact on you as a business buyer, because businesses are typically valued on seller's discretionary earnings basis, SDE, which is basically EBITDA, earnings before interest, taxes, depreciation, and amortization, plus an owner's salary. So in this instance, the lease payments are running through that depreciation. So if you add back those lease payments and treat them like a non-cash expense, you're going to overstate the earnings power of the business. So in that circumstance, you really shouldn't think of that depreciation as an add back for calculating cash flow. Now, what you could do is you could essentially take those lease payments and treat them as CapEx, which is one way to treat it. So as a buyer, there's really two things you can do. You can treat that lease expense as lease payment and just run it through the income statement when you model it out, or you can treat it as reoccurring CapEx. But either way, this business had about $850,000 in SDE is what they were advertising. These lease payments were about $250,000. So they were going to take a huge chunk out of the earnings, have a huge impact on the value of the business. And the broker had no idea. It was something new the broker learned during the call that we had with the seller as we were going through things. It was not taken into account in the valuation. So unfortunately, that means that this was way overvalued because you had almost $250,000 of expenses not properly accounted for on a business showing $850,000 of SDE to begin with. So if you run into this, just make sure you subtract it somewhere, whether it's as a payment on a lease or whether you do it as reoccurring CapEx, but either way, it has to be accounted for. And if you want to work with someone who's seen these types of things before, fill out the link in our bio and let's buy a business together.